Well, you know, one of the things which is most important to all of us, of course, because it goes every day, no matter which industry you are from, is time. And I'm going to call upon our founder once again of Traders Gurukul, because he's got this very interesting session that he's going to be discussing with you, and it involves time. So please put your hands together and welcome Mr. Ashok back on stage. Thank you.
So friends, good evening everyone. Welcome to this interesting new topic on the concept of time. So friends, let's come to the basics. What are the most fundamental things that we typically see as far as markets are concerned? We see price, volume, time, open interest, correct? Generally what happens, time is one area which is always ignored. We did a lot of R&D on this concept of time. I always tell people that we believe in God. For everything else, we need data. In fact, I stole that dialogue from Edward Deming. Okay? And we firmly believe in that whole thought process. Today, I am going to explain you a new dimension of time, what we have done. Alright? Before that, let me welcome an interesting person. As you all know, you have understood by now, I am not a techie. Though I worked for 10 years in the IT industry, I have my ex-colleague also sitting here. He is also aware that I don't know programming ever. But we have learned the art of building amazing products which can inspire our customers and showcases our talent in terms of its performance. Because we are product managers. Today morning I was talking to the guys in Dhan. The founder of Dhan he says he was one of the earliest product managers in India. I heard he worked on Rediff, late 90s. I became a product manager, I think, in 2006, pretty late. I want to showcase a beautiful product to you guys, and for that, I would like to bring on stage my fellow partner in crime, Arun Ayyar, who is the CTO of Traders Gurukul. Just to introduce Arun, Arun is a PhD in wireless communication from IIT Madras. He sits in the IIT Madras Research Park and he keeps doing his R&D work. We both sit in two different cities, 350 kilometers away. But I keep troubling him with a lot of new ideas and problems. Every time I give him a business problem, he comes back to me with a brilliant solution technologically. It's really great to have such interesting people on board, because when you have a great team, you will build amazing products. In this session, right now, in the next 15-20 minutes, we are going to showcase something really mind-blowing. Over to you, Arun. Guys, Tariq, can you set his mic?
Hello.
Yep.
Yeah, thank you. So, welcome all. Thank you. So, okay, so this journey we began, I think, about 6 to 8 months back when, this is the first time I'm coming on stage. Okay, so this journey we began about 6 to 8 months back when Ashok pinged me with a very interesting question. Okay, I'll reveal what the question is. I guess at the end of the talk you will definitely come to know what we're trying to do. So let us begin. So the contents of this is that we are basically surrounded by patterns all around us, right? And even in stock market we believe that history repeats itself. That's why you keep looking at patterns all over the place, right? So, but then the patterns are like intrinsic to nature itself in some sense, right? And so what are the sorts of patterns which occur in nature, which we even apply to stock market? So you have spirals, you have symmetries, and the most widely known pattern is the Fibonacci pattern. It is called as the Fibonacci pattern, but there is enough evidence that it's not actually the Fibonacci one. Well, let's not get into that. And I guess we have amongst us our mutual mentor Gurumurthy sir, who keeps talking of the fractals, right? So Mandelbrot talked about fractals, which is how the snows If you look at the structure of the snow, that's how it is. Yeah. So next, you have to check. Yeah. So what are the patterns we look for in the stock market? So we look at price, we look at time, not so much. I guess the only session which talked of time was yesterday's first session, right? And we look for patterns in volume. Now we'll just look through some of the common. So the most important thing is that you represent price of stock market in terms of open, high, low, close, correct? For a particular time, and you look for patterns in that candlestick, right?
Press the green button. Yeah.
Yeah, and as we all know, the famous adage is Bhav Bhagwan Che. So most of us, all the time we look at price alone, right? And what do we see in those prices? So in typically equity, we see patterns like, say, head and shoulders. You have the flag and pole, rounding bottom, so on and so forth. Yeah, these are some of the things which we all know commonly, right? So now the question we started with is, there are so many patterns in price. The question is, are there patterns in time? Right? That's a simple enough question to start with. Are there patterns in time? Okay. So the answer to that is, there is something called as Hust time cycle, which I learned from Murli Deshpande sir, who's also probably somewhere around. Yeah. And Ashok keeps talking a lot about GAN, right? GAN and GAN time cycles and stuff like that. So back.
You can go back.
Okay. So let me now ask the exact fundamental question for which the next slides are there. Okay. So the question is like this. If I take any stock, okay, and I look at the time, let's say I take 20 years of data. Now, every year, is there a particular day on which low occurs? Okay. And so let's call this day as day 1. Yeah, till now is clear? Take 20 years of data, take any date, go 1 year forward, go 1 year forward, go 1 year forward. I want some sort of a low occur to on that day. This is day 1. Now, you go some T number of days after that, get a day number 2. Yeah? Now again go one year, right? So every year you have a start date, you have a holding period. Now you take this chunk of dates and then you move 1 year forward. And what I'm looking for is, say 10%, 15%, 20% return in this time period. Is the problem clear to everyone? Yeah, there is some start date, there is some end date. Now I take the exact same, I move forward in time with say after 365 days forward. So the first question is, something like this, does it exist or not? Is there a pattern which is there like this, first of all? Second, if the pattern exists, does it return us something? Like, okay, there may be a pattern for 5 years. Is there a guarantee that it comes on the 6th year? Yeah? Or there is a pattern for 10 years. Does it repeat on the 11th year? Yeah? These are the two fundamental questions for which we'll show you the results for our analysis. Yeah? So to answer the first question, is there a pattern like this? That, there are a set of days between which a particular stock, say, returns 10% every year, consistently. Yeah? So the answer to that is, can you guys read these numbers? These numbers are visible? No? Okay, sorry, then I'll read it out, don't worry.
You can read it out.
Yeah, I'll read it out. So this stock is, this price is for Adani Enterprises. Okay? So the start date, all the red lines which you see, that's 29 September. Okay? The holding period is 1 month. So the end date is 28th October. Okay? And this pattern I am showing you from 2016 till 2021. 5 years period. Okay, take 29th September to 28th October from 2016 to 2021. Okay, the return in this period for 2016 is 13%, next is 15, next is 41%, after that 38, 26, 15 again. Okay, now the most interesting question, 29 September 2022 is coming. What's going to happen? We'll wait and watch. Yeah? So now, okay, so the first question I asked is that I start with a start date, I have an end date, I go 365 days forward, and I showed you that in Adani Enterprises, this sort of a pattern exists. This exists in a lot other stocks, okay? I'm just showing you the chart for Adani Enterprises. So now the question is, I took 365, right? So I took 29 September 2016, I went forward 365 days. Does this pattern occur in numbers which are not 365? Is my question clear? So you see these dates, right? So 29 September 2016, next year is 29 September 2017. The gap between these two is 365. If I vary that, are there patterns in numbers which are not 365, some other number? Question is clear? The answer to that, yes. This is okay, and you take a holding period of 29 days, and then you keep drawing all the, you keep moving 330 days ahead, 330, 330, 330. Yeah, I am here showing you from 2009 because I had to put this figure in one, right? Else 2009 is quite far off. So the culminating date, I think it comes to 10th October. Okay, the 330-day action date for Wellspun, that will come on 10th October. And if you see, the returns are 21, 18, 14, 26, 38, 26, 38. Okay? So the next action date for Wellspun, as I said, is coming on 10th October. Yeah? So our algo basically crunches the data for all the stocks, and then it picks these initial starting dates, it looks for the holding period, and then it also searches for the interval across the whole data. Yep. Okay. Then it figures out these intervals and comes up with this. Yeah.
So in this case, your holding period is 29 days.
29. In this 20, you see this, no? I don't know if you can read it from this far, but this is 29, 29, 29.
Okay. So at the end of every 330 days, it will look for a 29 days period holding.
Yes. Yeah, no, this is 330 is just a parameter to tell you. The previous one was 365. Yes. This is 330. There's something at 340, 380, 400.
Yes.
Okay. The interesting thing is that each stock has multiple such time periods also. It's not like Adani, I showed you a 365 day, right?
Yes.
It has other numbers also.
Okay.
Yeah.
Yeah, we'll move ahead. There's a lot of things to show. We have only less than 30
sorry,
minutes.
Sorry, yeah.
You took away 15 minutes, 5 minutes, 5 more minutes. Proceed, please.
Yeah, so
next slide.
No. You want to take this up?
Yeah, you want to answer his question? Acha,
oh,
sir,
yeah, no, I think we didn't let him ask the question.
Every stock has its own cycle, and every stock can have its own multiple cycles.
Yes.
A stock, it's not that a particular stock runs on a 300-day cycle and the second stock runs on a 500-day cycle. No.
So
sometimes single stock can have multiple cycles of lows and highs.
So Adani itself has multiple.
So many times what happens, we call it as point of vibrations, where multiple cycles come and coincide at a particular point where you get that required momentum. So the process model that we use for this program is we analyze the universe of 500 stocks, and then for that stocks we take action dates for 10 years. Okay, some problem in Ukraine, some problem in Modi government, some GST impact, that kind of thing doesn't impact the whole process model, because we are going 10 years. For example, we'll go till 2000. From 2000 to 2010 we analyze, and then we do the extrapolation for 2011. It's a typical data series. All right, from 2001 till 2011 we do, and 2012 we populate. That's how we populate the data, and the 11th year performance is always captured. And we have done, sorry, you said 20-year data, it's not 20, it's 28 years.
Actually, okay, there's small correction in this. The universal stock is not the current Nifty 500, it is all the stocks that were ever part of Nifty 500.
Correct, okay? I'm sorry.
That's about 12, yeah.
That's the meaning. So the Nifty 500 of every year, if the constituents are changing, the respective Nifty 500 we are taking. Vivek last time asked me this question, yeah. Next slide please.
Arun, I have a question.
Yeah.
Here. See, can it be more than once in a year?
Come again?
Arun, I'm here.
Yeah.
Okay. Can this happen like more than once in a year?
330 days is more than once in a year, no?
Okay. And again, the volume of expansion. So you have taken a benchmark of 10%.
Yeah, we have taken 10%, but you can look for 5%, 2%, 20%. As I showed you, the numbers for Welspun were way above 10%, right?
Okay.
So for instance, friends, we did a mathematical complete algo analysis. The algo is intelligent enough. It has its own intelligence to discover things. So all credit goes to Arun Ayyar and his team. It's an AI-based machine learning combined application. We did a 22-year analysis. Officially, the PMS output is almost 28 years of study, which is around roughly 340 months of analytics. We did trials for 30,000 trades, and in which we got 41% win rate. Our average profit per trade is more than 15%, and the average return of losing trade is around 5%. So it's more than 1:3. Okay, this is for the entire population of stocks. Again, based on this,
average holding period of the trade.
29 days.
29
Okay,
days.
people who don't know, 29 days is a lunar year.
I'll just take. So this is for the 365 day and 29 days. This is not for the other. It's only for the 365 plus 29.
Holding period is also a variable. Everything is a variable.
But
okay.
This analysis is for 365-29.
Correct. And for people who ask this question, why 29 days? The story is simple. Your annual year is 365 days, which is a solar year, and 1 month is roughly about 30.5 days. In a lunar year, it is 354 days. So technically, it is 29 point something days. That's why we take the lunar as the response. So this is the kind of returns we have generated, and this is just the entire family of data. Okay, if I go one step below, deeper, I can extract much more perfection. But the 30,000 trial report itself has passed our game. So this is a typical performance report of the time action model. We did an analysis from 1994 till 2022 this year. If you look at it, I always look at the worst possible times. Okay. How many times? So many times my father has told me, whenever I want to get into stock market, he will only remember two things, Harshad Mehta, Ketan Parekh. So he doesn't know there is a world beyond those times. Okay, people have made sizable fortune. Tell me something, which is the most powerful area in the world as far as CAGR is concerned? It can never be real estate. It's always stock markets, not even gold. What is the CAGR of gold last 30 years, friends? Maybe single digit. Yeah. So check what happened in 2000. 2000, if you look at it, the model gave positive returns. Okay. And then its next abnormality I wanted to check was in the subprime crisis of 2008. In 2008, market fell more than 50%, right? Indian markets fell. And in 2008, if you look at it, we just lost about 6%, which means model, even in a worst trial period, model is performing well. The only bad year was 2018, and 2022 we are still negative. Unfortunately, I think we are sitting at around -7-8% because I think Nifty this year is still negative, right? Or no, we went slightly positive. It's only long only session, no shorting. 100% long, 100% long.
Only, yeah. Come again? No, trading cost is not considered this.
No cost considered.
No.
Yes.
Yeah.
Okay, this is the UI we have built with the time action. Okay, so we have built a wonderful UI using this. Okay, generally what happens, everybody wants an advisor. Okay, generally the advisor gives 1,000 recommendations. Who is
I had a
tracking it?
question. Can I ask a question?
We'll come to it, sir. We'll come to it. 5 minutes. Okay. So who is tracking it? So the fact of the matter is, when you have an advisor next to you, you need to verify the authenticity of the advisor. So that is what we have tried to build in this application. It has its own intelligence to tell you what is happening today, what happened yesterday, what happened last week, what happened last month, what happened last quarter, what happened last year, okay, what happened 5 years back. So any of the advice the engine gives, the system will seamlessly track everything. It will expose us brutally. How much ever I keep claiming here, next month if it doesn't perform, it doesn't perform. But it is tracking the last 20 years in a very seamless mathematical way. Not only that, we have built an amazing UI, okay, a very user interactive UI. You can play around on this application with your mobiles. It will tell you the monthly superstars, the quarterly superstars, yearly superstars, okay. It will expose the possible time scale. Simple example, let's say the engine tells October 15th by Reliance Industries, okay. Now the engine will also tell you, you see in cricket, right, last 6 balls, first ball 0, second ball 6er, third ball 4, fourth ball no ball, fifth ball wide, same thing. It will tell you what happened last 20 trades. There will be a beautiful meter which will tell you whether this particular tool or this particular trade is good enough in terms of capacity, okay, whether it is momentum sufficient, whether it controls volatility, whether it can give consistency, everything it will tell you. Alright. Next. So the total statistics of the entire report we have integrated. Now when Arun proposed the entire Nifty 500 performance, we started introducing sectors also. For example, some people want to trade only auto sectors. So we are making it sector filtering, auto, FMCG, infra, IT, and also caps, large cap, mid cap, small cap. But the beauty of this model is it will always consistently telling you everything end to end. The intelligence of the application lies in exposing itself to you, correct? And Nifty caps and sectors are some of the things which has been introduced, and this product is going live very soon from our stable, and our next roadmap is mainly on options. We had an intelligent idea. Arun Ayyar has already finished the draft and design of the entire product. Maybe we have to get into development. Our next vision is to build applications like this which will expose the intelligent things that are available inside the data using hardcore data analytics, artificial intelligence and machine learning. And next we are going to come out with products on price action, volume action, OI action and also pair action. Pair is one area nobody has explored. What is pair trading? Long ICICI Bank, short HDFC, you call it pair trading? I will tell you, W.D. Gann did one world-class pair trading during his peak of his career. You know what he did? He went long on a company called US Steel and he went short on a company called Douglas Aircraft. You know how the trade performed? US Steel went 500%, Douglas Aircraft with that he shorted, it went to 0. That is the mother pair of this century or maybe the universe also. Do you guys understand? He took a pair trade, one guy went to 500%, the long guy, the short guy went to 0. Please give a big round of applause to people who teach us such amazing things. I don't believe in this correlation of common stocks and sectors. I don't care. I don't mind going live on Tata Motors and going short on HDFC Bank. What is wrong? My money, my wish. As long as I make money, what is the problem, friends? Right? So this is what is our next mission. The future intelligence that we want to bring in is, I want 10 daily pairs. I want 10 weekly pairs. I want 10 monthly pairs. How is that? Which means monthly pair should be the beginning of the month. I will discover and publish these 10 guys we will go long, these 10 guys we will go short. Right? For the whole month. You will only close on expiry day, last Thursday. Weekly we will go long on Friday, the weekly pays 10 and 10. And intraday also we will punch 10 long, 10 short, and the entire data of the last 10 years would be published. How about that? So this is the kind of topics which are being worked on, and sorry. All right. So any questions? Yeah, we have about 5 minutes. Okay,
Hello.
Ashok.
Ashok, I just have one comment before go ahead, Ashok. Here.
Yeah.
So I read The Misbehavior of Markets by Benoit Mandelbrot 13 years back.
Right.
And I think one amazing book. I could never find any way how this can be applied. So this is the first time just seeing some answers about how this can be applied. So thank you. Genuinely thank you for sharing this.
So all credits goes to Arun and his team. Okay, definitely, because I keep irritating him with lot of requirements. Some days night I just call Tambi, I got an idea, Anna sollu. So I'll start talking to him, and many times I forget that, because night, no, I go to bed and I forget. There are times he comes back and said, you remember last month you gave this story, I worked on it, here is the report. So this is what Arun does. So please give him another big round of applause. All right, thank you very much. Any more questions? We still have
Somebody
couple of minutes.
there had a question, no? If I remember.
Sir, please, sir.
Mike is reaching you. So while the mic reaches, one interesting tidbit on the pair action, we were discussing that day, we found a very interesting pair, which if I reveal is straightforward. So you take crude and Asian Paints as a pair. So Asian Paints, if crude goes down, Asian Paints goes up. So the point is that don't look for pair only in stocks. Look across all asset classes, right? So take a commodity, take a this one.
Sir.
So my question is, you displayed an Excel sheet with a heat map. Now, I was looking for correlation with any bear market. Did you find any
Correlation?
with bear market? Bear
With-
market.
Bear market, I discussed with you, right? 2018, we were our drawdown was hardly 5-6%.
No, 2008.
Okay, that is one part. Even 2000 during the dot-com crisis, the bubble, there also our drawdown is comparatively low. So ideally, this is 100% equity model. See, last time we discussed StataZone. It is for traders. This product is for investors. Today, traders are not, confused. Traders at least know what is trading. Investors don't know what is investing. Remember that, right? Traders, at least he will know what candlestick is. There are so many investors who buy shares who doesn't even know how to define a share. Traders are not dumb. Traders are smart. But the problem with them is there with temperament. Investors are really dumb. This is what our analysis says. So one last question before we wind up, friends. Okay, thank you very much. Have a nice day.